Now we have one more concept called internal financial controls versus internal control over financial reporting. Very important concept, but very simple concept. So two terms they are using here. They are asking us to explain the differences between two things. Number one, second. Number one is internal financial controls versus internal financial controls over financial reporting. So we need to explain what are the differences between internal financial controls and internal financial controls over financial reporting. Before we can understand the differences, first we need to understand the meaning. Sir, what is the meaning of internal financial controls? Sir, nothing but internal controls also will have other name called internal financial controls. The other name for internal controls is what? Internal financial controls. Nothing but those policies and procedures which are implemented by the management to achieve their objectives. Like internal controls will have various objectives. Like what objectives? Like we read in the previous answers, safeguarding the assets and prevention of frauds and errors. This is also one of the objective. Increasing the reliability of financial statements. They make the financial statements and books of accounts more reliable, and also they will make sure the efficient conduct of business. They will make internal controls will make sure that business will be conducted in a better way. So like this, internal controls or internal financial controls both convey the same meaning. Any policy or procedure which is getting implemented by the management to achieve their objectives, like safeguarding the assets, prevention of frauds and errors, increasing the reliability of financial statements, and also conducting the business in an efficient manner. So like this, if you observe, internal financial controls or internal controls will have various objectives. On the other hand, internal financial controls over financial reporting means they are actually a subset of internal controls. They are actually a part of internal financial controls. Nothing but those internal financial controls which have an exclusive objective of increasing the reliability of financial statements, they will be called as internal financial controls over financial reporting. So internal financial controls or financial reporting is not altogether a different set of tools. They are actually subset of internal financial controls only. They are also a kind of internal financial controls only, but which are exclusively related to reliability of financial reporting. See, the term internal financial controls is a very wider term. It includes all the controls with different objectives. It includes controls with the objective of safeguarding the assets. It includes controls with the objective of preventing of frauds and errors. It includes controls with the objective of increasing the reliability of financial statements. It even includes controls with the objective of increasing the efficient conduct of business. So all these objectives will be collectively called as internal financial controls. Out of that, those internal controls which are exclusively related to reliability of financial reporting, that we call it as internal financial controls over financial reporting. So I will say internal financial controls, if you have an entire, so for example, if you take this entire set of controls are internal financial controls. In that, one of the part is internal controls over financial reporting or internal financial controls over financial reporting. So internal financial controls is a very broader area which includes controls with different objectives. In that, one of the subset is internal controls over financial reporting, which are controls only related to financial reporting. Let me give you one example. Assume CCTV cameras are installed. Internal control or internal financial control? Yes, it is an internal financial control. Why? Because CCTV cameras are internal controls which are with the objective of safeguarding the assets. So this is an internal financial control. CCTV camera installation is a internal financial control. Why? Because it is having an objective of safeguarding the assets. But will this come under internal control or financial reporting? No. Why? Because it is not related to financial statements. So this will be an internal financial control, but this will not be an internal financial controls over financial reporting. Let me give you one more example. Appointment of security guards. The management has appointed security guards to make sure that theft or error do not happen. Is this an internal financial control? Yes. Why? Because internal financial controls include those controls which are implemented with the objective of prevention of frauds and errors. Now tell me, is it an internal financial control over financial reporting? Is it exclusively related to financial statements? No. Appointment of security guards has nothing to do with the financial statements. Let me give you another example. Segregation of duties. See, the management has appointed an accountant and clearly told that cashier will be responsible for only making cash payments and receiving the cash receipts, whereas accounting entries will be passed by accountant. This is a segregation of duty. Is it an internal financial control? Yes. Why? Because it is relating to safeguarding the assets. It is protecting the asset cash. And it is also making the financial statements more reliable. If the cash entries are passed by accountant separately, entries in the books of accounts will be more reliable or not. So now segregation of duties will become internal financial control also. It will also become internal financial control over financial reporting also. Why? Because this is the internal financial control with the objective of increasing the reliability of financial statements. Understood? Clear, everybody? So all internal financial controls over financial reporting will be forming part of internal financial controls, but all internal financial controls may not become internal financial controls over financial reporting. Clear? Like the examples I have given, CCTV camera, it is an internal financial control, but since it is not directly related with the financial statements, that will not get covered under the definition of internal financial controls over financial reporting. Appointment of security guards, that is an internal financial control, but that might not come under internal financial controls relating to financial reporting. Segregation of duties, now since this is related to financial reporting, it will get covered in the internal financial controls also, it will get covered in the internal financial controls over financial reporting also. Clear? That's all. So let us see what they are trying to say here. This is what the simple answer. The same thing they will try to explain even in the answer also. Let us have a look at it. So internal financial controls. What is the meaning of internal financial controls? So as per section 134 subsection 5 clause E of the Companies Act 2013, the term internal financial controls means the policies and procedures adopted by the company for ensuring orderly and efficient conduct of business, including adherence to company's policies, safeguarding of the assets, prevention of frauds and errors, accuracy and completeness of accounting records, and timely preparation of financial information. This definition is sounding familiar, no? Nothing but this is what the definition and objective we have read for internal control. So that's why I told the term internal controls or internal financial controls both convey same meaning. They will have multiple objectives. Now, what do you mean by internal financial controls over financial reporting? The name itself says internal financial control. We have already defined over financial reporting, nothing but which are exclusively related to financial statements. Like they have given 6 objectives in the above answer. The internal financial controls which are exclusively related to this 5th objective will come under internal financial controls over financial reporting. So let us see how they have defined this term. As per the guidance note, audit of internal financial controls over financial reporting issued by Institute of Chartered Accountants of India. So ICAI has released a separate guidance note on internal financial controls over financial reporting. In that they have defined this term internal financial controls over financial reporting, a process which is designed to provide reasonable assurance regarding the reliability of financial reporting and the preparation of financial statements for external purposes in accordance with generally accepted accounting principles, which simply means that whatever processes are there, whatever policies which the management has implemented exclusively to increase the financial statements more reliable, to make the books of accounts and financial statements more trustable, those policies and procedures we call it as internal financial controls over financial reporting. If I put it in other language, those internal financial controls which are exclusively related to this particular 5th objective, which increase the accuracy and completeness of accounting records, which make the financial statements more reliable, that will come under internal financial controls over financial reporting. So that's why if you have a look at this, internal financial controls over financial reporting includes those control which are related to maintenance of financial records, nothing but books of accounts, which are relating to approving the transactions in accordance with the GAAP, generally accepted accounting principles. That means those controls which are related to approving the entries, checking the entries, or those financial controls which could be related to safeguarding of the assets. Like for example, if I say segregation of duty is protecting the assets. At the same time, it is increasing the reliability of financial statements. No. So that's why sometimes some controls might be relating to safeguarding the assets, but they might indirectly increase the reliability of financial reporting also. So that's why internal financial controls over financial reporting includes those controls which are related to financial statements and books of accounts. Now, if we try to understand the differences between internal financial controls versus internal financial controls or financial reporting, let us see what they are saying. Once again, same points they will repeat. Internal financial controls over financial reporting covers those controls which are exclusively elements of financial reporting. That means those controls which are related to balance sheet, those controls which are related to profit and loss accounts. They cover those risks which are having a direct or indirect reporting on financial statements. That means internal financial controls over financial reporting, they will be protecting those risks which are directly or indirectly related to only financial statements. They have nothing to do with prevention of frauds and errors. They have nothing to do with efficient conduct of business. They are directly or indirectly related to risk related to the financial statements. Whereas, if you have a look at the next point, whereas internal financial controls, in addition to internal controls over financial reporting, they ensure they fulfill even other objectives also. The term internal financial controls is very broader term. It just doesn't include only that control. It just doesn't prevent only that risk related to financial statements. They also make sure that efficient and effective functioning of business. They even function for the safeguarding of the assets, and even they will have compliance with laws and regulations. Which one? Internal financial controls, which is a very broader term. Just remember this circle. So internal financial controls is a very broader circle, very broader space. It includes those controls which are relating to safeguarding of the assets. It includes those which are relating to efficient conduct of the business. They include which are relating to prevention of frauds and errors. They include those controls which are related to compliance with the laws and regulations. In that, one of the part is what? Internal controls over financial reporting, which are related to the reliability of financial statements. So to put it differently, internal financial controls as a concept is a much wider in scope when compared with internal financial controls over financial reporting. Nothing but if I put it in other way, internal financial controls over financial reporting is a subset of internal financial controls. In fact, internal financial controls are, if you express in the form of an equation, it includes internal financial controls for financial reporting plus other operational controls and also anti-fraud controls. Anti-fraud controls means what? Those controls which are related to prevention of frauds and errors. Operational controls means those are relating to safeguarding of assets. Those are relating to efficient conduct of business. So internal controls over financial reporting and all other controls, if you add it, that entire space, that entire universe becomes internal financial controls. Thus, it can be said that internal financial controls over financial reporting is a concept which is more intended towards users or readers of the financial statements. That means they are exclusively related to financial statements, whereas IFC, internal financial controls, is more intended towards functioning and management of the business. So here they have used with various places shortcuts. Don't get confused. IFCFR means internal financial controls over financial reporting. Here also at one place I want you to make the change. Don't use ICFR here. Here also use the term IFCFR only. Okay, so only two shortcuts they are using, only two acronyms they are using. IFCFR means internal financial controls over financial reporting. IFC means internal financial controls. That's all. I hope everybody is clear with the discussion. So this, whatever background discussion I have given, whatever examples I have given, this will make you to understand the concept in a correct perspective.